Lounges have become one of the primary reasons to own a premium credit card. But the lounge wars aren't just happening in the airport. Whether it's American Express at Coachella or Chase Sapphire Reserve at the PGA Tour, these hospitality spaces have become increasingly important to cardholders, paying annual fees approaching $1,000 per year.
We see customers that engage with experiences like this. They are more engaged with our product. They certainly drive loyalty. It's a different type of investment than a pure other type of marketing and media investment.
The economics of things like lounges are really interesting because economists would think of those as more of a network good. These lounges become particularly valuable when there's a set of them that you can access in a variety of different places, not just in an airport perhaps, but at another exclusive event.
CNBC took a deep dive into how credit card companies are fighting for affluent cardholders and why the lounge wars have moved beyond the airport. Credit card lounges have become particularly popular at music festivals over the past few years. American Express sponsors festivals like Coachella, Stagecoach, and Austin City Limits, where it opens lounges for its platinum cardholders. They can offer anything from comfortable seating and private bathrooms to drinks and exclusive merchandise.
Our hope is that you engage with these moments, deepen the emotional connection that you have with American Express, and that really raises the American Express card to the very tippy top of your wallet and makes this the card you want to use each and every time you spend.
Chase has offered lounges for its premium Sapphire Reserve customers at festivals like Lollapalooza, Ocean's Calling, and Outside Lands. This year, it's opening branded activations at 5 music festivals with private bars and premium viewing areas for customers of its no-fee credit cards.
My read of these pop-up lounges, these exclusive events, these are 100% for customer acquisition. They are meant to draw in the person who perhaps beforehand didn't see the benefit of this particular card network. All it takes is for one element of this bundle of rewards or perks or whatnot to swing a customer.
Amex announced an official partnership with Formula One in 2023, and now its platinum cardholders, who pay $895 per year, have access to lounges at racetracks around the world. Chase's $795 Sapphire Reserve credit card holders have access to lounges at events like Sundance Film Festival and even the Paris Olympics.
Our lounge strategy is very important to the overall strategy. We see that the lounges as a way to add this level of access and intangible value. We see it drives more loyalty. It's also a nice physical manifestation of the brand that our customers are already interacting with in other ways. It started with airport lounges, but there's other opportunities for us to deliver that level of experience and hospitality.
Amex opened its first airport Centurion Lounge back in 2013. Since then, it's built out its airport portfolio to more than 30 locations while simultaneously growing its hospitality offerings. Chase didn't get into airports until 2023, but has long played in the event space. It first opened a lounge at the US Open back in 2011. Unlike Amex, whose business mainly comes from credit cards, that's just one small component of Chase's massive banking business. So at events like the US Open, for example, it has spaces that are available to all of its customers. Chase customers and American Express cardholders fight for these coveted spots at the US Open each year. Building out these partnerships aligns these credit card companies with premium brands and experiences that are favorited amongst wealthy Americans, as well as Gen Z and millennials. Back in April of 2024, the American Express CEO told CNBC that that segment had accounted for 60% of new customer acquisitions in its previous quarter.
Millennials and Gen Zs, and what we realized was that they wanted access, they wanted experiences, they wanted to get special privileges.
A lot of millennials and Gen Z are increasingly the ones driving new accounts at these premium card issuers. Sometimes you'll get investor concern around that from a quality and credit standpoint, but it's part of the life cycle, right? I mean, the first card I got was out of college, my Amex card, and I still have it.
There's kind of high net worth audience for F1. There's a really kind of discerning, cool crowd for Coachella. Clearly the value is in the upper end of the market, and clearly there's an understanding there, especially that Gen Z are very well connected and are becoming very savvy about how to send their status signals.
Ultimately, these partnerships incentivize credit card spending. Take Coachella, for example. Amex offers exclusive access to purchase tickets and offers statement credits for spending at the festival. It's a win-win for the festival, who is attracting affluent customers, while Amex benefits from bigger balances on its cards.
Whether you're a big music fan and your passion is Harry Styles, or your passion is Olivia Rodrigo, or your passion is the NFL, or Formula One, or the NBA. So we're here for fans. I think fandom is an incredibly powerful force to bring people together and to make connection. And so we are leaning into that in a very big way through these partnerships.
Like its lounges at the airport, Chase and Amex have built out more permanent structures at arenas and stadiums around the world.
A lot of the lounges at sports and entertainment venues around the country are part of broader partnerships that we have with those venues and in some cases with those teams. And so when we look at something like Madison Square Garden or the Chicago Theater or Lincoln Center or the Chase Center in San Francisco, those are places we're really excited to be and partnerships we're really excited to have because of the holistic suite of benefits that we're able to create for our card members there.
Chase has only built out a couple of these types of lounges though. One of the most notable being this one inside of Madison Square Garden. It's open to all of its banking customers, but there's actually a lounge within the lounge for its most premium credit card holders. Amex has partnered with more than 20 venues worldwide. The company has built lounges inside these 8, with more on the way.
It's all about providing these services and experiences that make it worth it to the cardholder to pay those annual fees. And so that's kind of how we're thinking about it right now. Very expensive, easily in the millions, tens of millions, even for these smaller venues, and then could be up to, 100 million for a New York airport build out.
Whether you have 10 people in the lounge or 100 people or 200 people, those costs of extra sandwiches or of extra drinks is just completely negligible compared to how much it costs to set up the network in the first place. And so all of these very flashy ways of making these big spends is kind of a big push to draw people into the network, to expand the network, and then to essentially be able to be at a place where the costs are just maintaining them.
American Express's Centurion New York takes it a step further. It's a members club-like space with a bar and full-service restaurant in the middle of New York City. Space is prioritized for Centurion cardholders, an invite-only credit card that costs $5,000 per year to hold.
It's a restaurant at the top of One Vanderbilt, and you have to be either a Centurion cardholder or US Platinum, but that's a very differentiated experience. It's kind of unlimited in terms of where you could go with this membership thinking.
American Express and Chase both upped their annual fees on the competing Sapphire Reserve and Platinum cards in 2025.
The big card issuers that are in this premium space have 98, 99% retention rates, very high. American Express, they recently refreshed the US Platinum card, and that comes with a higher annual fee, but also higher value for the card holders. It drives more spend, it drives new account acquisitions.
This is important because cardholders with an annual fee of over $500 spend more than double those with cards that have a fee of less than that. It's indicative of the K-shaped economy, where high earners are continuing to spend, while lower income consumers are spending less.
It's really important that we are continuing to bring value to the customer, but also bring these intangible benefits and experiences that kind of drive loyalty with us. We find this customer to be very engaged. Once you get their business, there's a lot of loyalty there, and so they're an important segment to continue to nurture.
Those with a credit score of 720 or above, which is typically required to get approved for a Sapphire Reserve or Platinum card, also see consumers spending more than double the average of those within a score of 660 to 719.
Even people who have perfect credit scores, some of them do carry a balance. And so that interest that they pay on their transactions, that's where credit card companies make most of their money. Puts into perspective what the objective for a credit card company is, which is to find the golden goose consumer who is going to spend a lot of money, but who is also going to carry a balance while not defaulting on the loan that they've taken out.
This business takes a lot of scale. So you have to have a very big revenue base to sort of fund all these lounges and rewards and benefits. For example, if you look at American Express, in 2025, their revenues were north of $70 billion. That's bigger than the next two competitors' card businesses added together.
Revenue from credit card fees totaled nearly $10 billion for Amex in 2025. It's up around 40% since 2023. Chase doesn't break out the revenue from annual fees in its public filings.
One of the key things, which is credit cards, higher fees, it's going to send a certain signal. But what we really need to be making sure is that we're understanding the psychology of exclusivity and knowing how to bring people in, because that's the more important signal. It's easy to say, I have lots of resources. It's harder to say I have enough social capital to earn my way into spaces.